This video, I'm gonna break down the trade I took on gold. What you're looking at right now is a screenshot of the trade I took earlier today, or really yesterday. As you can see, the time is now 12:51 a.m. my time. But I want to break down this trade. I'm gonna break down a strategy, or what I will call a deferred divergence, or deferred SMT. And this trade was taken on gold. So what you're viewing is a 5-minute chart, and you can see over here, I outlined how this is an ugly market maker sell model. A couple things I just want you to look at while viewing this chart is one, the market somewhat consolidated here, starting at midnight opening, and we drove higher into this blue shaded area, which I'll talk about in the video as I go further. I'll break down on the higher time frame what I saw here in this blue shaded area, and then we saw price somewhat consolidated here. And you see me sell earlier, and then I bought, so I actually took a very minor loss here. And then I sold again once price was confirmed after I found after the strategy played out, which was a deferred SMT. I got some shorts. I exit my first position here, below here. And then look at this inversion fair value gap right here. See how this fair value gap here previously supported price? Well, wonderful. When this price now comes down below it, it goes back into it and then drops lower, taking out these lows, completing the market maker sell model. All right, so let's go into why I was even in this trade. You want to start off with a higher time frame level. You don't want to just start off on the 5-minute chart. Nothing else makes sense until you actually incorporate the higher time frame and what was seen there in order to then make a real decision. So we're gonna go to the charts now. So first, let's look at the 4-hour chart for a second for gold. All right, so what do you see on gold? If we're looking at gold right here, right? You first notice this orange lines that I have here. This just delineates each week. So from this space here, this was last week's. This was the week between December 2nd to the 9th. That was its low. You can see the low's actually right here. And then if you want to start off this week really will start right here. Boom. I'm just gonna make that orange since we're here. All right. So now you have it. So last week's low is actually right here. So this will be an interesting area down the line. We're not going to talk about this right now. But point is, these orange lines show the delineation between each week. Now, what you notice is last week, we had a movement up higher that took out a pool of liquidity, which is important. So since price took this high out, right, with this run here, snatch liquidity there, and then we aggressively start breaking down, trade a little higher, broke down again. On a high time frame basis, based off the 4-hour chart, my expectation is that we actually run below these lows, right? All of this, if I just draw this out. So with that in mind, that's why I was bearish today. And then the key area on the high time frame level, we want to identify that. What key area on the high time frame level would you want to consider getting short? I was looking at this 4-hour level here. So that's a blue shaded area I mentioned earlier. So again, you want to look at these fair value gaps like somewhat of elevators. So when this fair value gap was created, right, the space between these candles high and low, when that was created, price dropped here and then took off. But eventually, when it came all the way back below it, it traded up in here, and now we're seeing somewhat of a sell-off. So overall, my expectation was once we're in here, I want to see price drop off below these lows. All right, so that's what that shady area is. Let's go into, look at it from a 15-minute perspective. Now, interesting enough, this was a high for pretty much Friday's New York session high was right here. Well, sorry, ignore that. Just ignore that. But this was a high here that I was thinking price could run out. right? But then my mind changed later when we had the SMT divergence or the deferred SMT setup. So let's go into the 5 minute chart where everything really took place. All right, so 5 minute chart. I'm just gonna again do this for a second. All right, so what do we have here? Again, one thing you want to make sure you're paying attention to when it comes to trading gold or Forex, this applies to Forex as well, is a 7 a.m. opening price. 7 a.m. New York time opening price. That price is critical and crucial. You want to treat that price level somewhat as a premium and discount level, or cheap versus expensive. So price goes above it. You ideally want to sell. Price is below. You ideally want to buy. So, and the same goes for midnight opening. So the fact that we open here and we're all the way up here, we're all the way up here, right? And midnight opening price is down here. So there's a couple things in play. Midnight opening price up is down here. Price is up here. So what does that mean? That means that in my mind, price is in a premium. Price is expensive. I don't want to buy that. And on top of that, we're also in a 4 hour high time frame level that we already identified. Okay. So now, what is the divergence? Where did that come into play? Well, let's look at silver, its counterpart. So if we're to compare silver, I believe, let's do this for a second. Use SIG 2025, new pane. And we're gonna make this. Okay, I don't know what's going on here, why it's not showing. So what I'm just gonna do is do this instead. Silver right here. Perfect. So notice this high right here, right? 8:55 a.m. Look at how this is the highest high. Let's go back to gold. The same time, 8:55. Look at that. It failed to make a higher high. So again, we'll check one more time. This 8:55 right here on gold. It did not run out these highs. Meanwhile, on silver, 8:55, we see this run here. So immediately, I'm thinking, great, prices are likely to start dropping down. Do we have a reason? Do we see anything that will indicate price is breaking down? Well, what we had here, this shaded area here in green, we will notice it's going to be 1 minute fair value gap. But before we get into that, what we had was a price ran up here, again, fell short around these highs. So that would be considered an SMT right here. All right, that's an SMT. And the reason I call that a deferred divergence is typically your best setups come when you're patient and you're waiting for a range to form. So one thing we don't want to do as traders, your best setups will really come from once a range forms. For example, this high to this low. You want to see price either take out the high and then you can start formulating some type of sell scenario, or take out the lows and then you can start formulating some type of buy scenario. So you want to figure out what structure is in place, right? In this case, the structure from here to here was in place. This is the last structure, the most meaningful structure in my mind, from here to here. So I didn't want to press any button until, or ideally shouldn't press any button until you see liquidity get snatched on that structure. So I call it a deferred SMT because the structure didn't get hit here. The high didn't get hit, pierced here. But on silver, we see that structure get pierced. So the fact that the structural high didn't get pierced is a little bit different from the regular SMT where you just see, for example, this might be a high and then this one made a higher high, right? But then the other one didn't make a higher high. What I'm saying is the primary structure that I'm watching, which is this low to this high, is the primary structure. And because that primary structure did not get pierced, I'm considering that an SMT or deferred SMT setup. So Point is, price was higher, wicks back. Notice how it wicks back in here. What do we have here? If you look to the left, if we were to extend this out, well, I don't extend it out, but you can see there's also fair value gap here. So price is respecting that. Then we break down a little bit. We create a swing high, which is also critical for the setup. Create a swing high here, right? Confirming that price, again, is not likely to push higher because we even created a swing high after having a deferred SMT setup. Then we have, what is this here? A fair value gap in place. So you can take a trade right there for a sell. Then price drops lower, trades back higher into what? This set of order blocks. These are up close candles here. So if we draw this out, boom, that's the order block there. And it's even more powerful, right? Because if we pay close attention, that order block, this order block here also ran out what? A liquidity pool right here. And then it breaks down. So you can also enter here as well for another setup and drops lower some more. Another order block setup right here. And then it drops some more. You could also take another setup right here for an order block because why would you do that? Well, price has ran below this fair value gap and it's no longer showing that was supported. So when you see that, then your mind was, okay, well, if this acted as the elevator at one point going higher, now it's going to act as the elevator descending. So we see price trade back in there, and then we see that drop off aggressively. To what? Another fair value gap here that supported price before, and then price tries to push back up, but guess what? It's stuck right here because this now becomes an order block that's overlaid, right? Right on this fair value gap here. So that is also significant. I'm going to draw this out right here. That's another order block. And I was steadfast with my shorts because I understood that, yes, you can see it's an ugly market maker sell model, but it's in play on a 5-minute chart. I understood that at the end of the day, you can easily see the accumulation and then where price needs to distribute to or it's likely to distribute to, which is below here. So as much as this pushes higher, I knew they weren't going to spare the flock. They could sometimes do, but like ideally it wouldn't. And if they were trying to shift course, because I entered in up here on my trade, once price trades back above this specific fair value gap that treated price as an elevator previously, then I'll become more concerned. But we see the wicks here failing to even close above that. Using this as an order block, then we puke out some more to finally take out those lows. So it's very ugly at the end of the day. It wasn't the cleanest in terms of price. But on 4-hour time frame, it looks very clear what it wants to do. We took advantage of that, and we had a deferred SMT setup where this run here did not run out the primary liquidity pool I was looking after. However, it did on silver, and then we have this nice, sweet breakdown on the trade. And after that, what does the price do for the most part? Really just go back and forth, right, at this point. So to me, the algorithm had completed its mission and getting to where it needs to get to, and everything else, and they was just now consolidation because price has acted as it needed to act in order to get to its targets. So we keep going to 1-minute chart here very briefly here. And one thing I like to point out to 7 a.m. opening, right? Look at this price. So it hit there and rejected. So you can see the beauty there. On 1-minute time frame, you kind of see how more clean this actually is too. We had this fair value gap here. What did this do previously? Previously, its fair value gap dropped price. So it acted as an elevator that was descending. Here, it dropped price again. Then here, it goes higher. So again, when it goes above it, you're expecting to push higher. But we had that failure of a run high here. And we come right back below it. So now guess what? Since we're below it and then trading it back up into it, I'm expecting it to act as an elevator again, descending lower. We get that drop lower. We created what? A new fair value gap here. Price trades instead. That's a sell right there. Drops lower again. Trades higher. Fair value gap right here. Another sell off right there. Again, fair value gap here. Another sell off right there. So just wonderful. And even when price tries to go up higher here, is bumping on this fair value gap that what previously acted as elevated center price. You can see how it struggled. There's wicked in there, and we finally sell off there. So again, just an easy, nice, beautiful setup. It's important. One thing I'll say that I'm incorporating to the way I operate now is, yes, I love to trade Nasdaq. I just seem to do that every time, but Nasdaq has just been on a tier higher, and it's a little bit uncomfortable trading Nasdaq when it's just or trading a stock or indice one just constantly making all time highs. I like personally like trading more structure in place. And again, when I look at gold, I can see the obvious, more than likely, I can see how this is a clear liquidity pool wants to take out. Nasdaq has just been tearing up higher. So not to derail from our breakdown today, but it was a nice setup here, um, where probably it was ugly per se, but you can still kind of see the details, especially if you go down to that 1 minute time frame. You can kind of see how the market started operating, when it just started dropping lower and lower. Just very smooth setups, easy, straight to the point, nothing ridiculous. Even if you waited after 9:30 opening, because that's when the stock market opens right here, future market opens. If you waited to 9:30 opening price, you can still see, yes, it dropped, but it traded back in here, giving me a fair value gap for a setup to then take price lower to these lows. So again, how many dollars did this drop? Starting from here, that's about 12 or 13. Yeah, $12. $12 drop. So one contract there is 1,200, two 2,400. All right. So thanks. This was insightful. You learned something about the deferred SMT setup. Like, subscribe to the channel. I got way more stuff coming your way. You don't even know it. Trust me, 2025 is going to be a good year. I will give a lot of knowledge and drop my course here where you guys can obviously, if you want to tap in and be part of the community and ask me questions directly, you guys have access to that. I have been 9 people that access for years just because I keep on focusing on what's right and what's most beneficial for me, which is constantly learning the charts, constantly pouring into my skill set here. But now I'm at a point where I don't mind sharing that knowledge and being helpful to others that need to understand or need to know or have questions or need help on their journey of trading. So I will be creating a beautiful community in 2025 and give you the opportunity to ask me questions as accordingly and buy that course. But about from that, this was just a nice setup. Again, free of charge. As much as I'm saying I'm having a course, my YouTube channel will have a lot of free game that you don't even need to buy the course when that time comes, if you are even considering that. So there's a lot of game here, though, regardless, that you can take away with you. And I haven't heard anyone talk about that deferred SMT, but I just gave it here for free because I love you guys. I want to see you guys win. It's all about that. Success is what matters, and getting to the next level. So again, this was insightful. All I ask for you to really do, just like and subscribe to the channel. Drop a comment if you love this breakdown, and I got way more coming your way. Until next time, talk to you later. The Colossal Trader is out. You have a wonderful day.